Hello and welcome to CIMA P3 Performance Strategy Lecture 4 Recap, Internal Controls. First things first, what are internal controls? Internal controls are procedures and policies to conduct business efficiently, to safeguard the assets of the business, to prevent fraud and error, to ensure accuracy, and to ensure timely information. Okay, so that's what internal controls are and what they're seeking to achieve. So what makes up an effective system? Well, the first thing to look at is the control environment. This has got to be communicated from the top. Okay, the board has got to have strong controls in place. There's got to be a commitment to competence throughout the business. The control environment will also be dependent on the management style, the organisational structure, the structure of authority and responsibility, and the HR policies. You know, if people think they can get away with things and not get sacked, they probably will. Okay, the other thing is control activities. Examples of control activities will be control of or approval of documents, IT controls like passwords, usernames, reconciliations, reconciling the bank regularly, reconciling sales ledger, purchase ledger, all those reconciliations are control activities. Arithmetical accuracy, control accounts, restricted access, especially to high value goods, physical counts, for example of inventory, and segregation of duties. That just means that having several people involved in a process rather than one person doing everything. So control objectives then, well, these depend on the system. If the system is high risk, there's going to be different objectives from a low risk system, and there's got to be communication of these objectives throughout the organisation. So what we're going to do now is look at various cycles, and we're going to identify the control objectives and the control procedures in place to achieve those objectives. First cycle we're going to look at is the sales cycle. Okay, so the first step in the sales cycle is that the order is taken by the customer. The control objectives at this stage: you want to have accurate orders, you want to make sure that all your customers are creditworthy, you want to ensure that credit limits are adhered to, and you want to make sure that the order can be fulfilled. So the procedures which will be in place to ensure that this happens: you're going to get written confirmation of every order, you're going to undertake credit checks of all customers, you're going to check the limits, the credit limits, before you process the order, and you're going to check the inventory to make sure that you have the goods in place to deliver. So our next step is that the goods are dispatched to the customer. The objectives in this step of the process are that all orders are sent, that the goods are available, and that the correct goods are sent to the correct customers. Procedures to ensure this: you want to sequentially number all the orders so that you can make sure that none are missing. You want to ensure that all orders are authorised by a manager or whoever's in charge of the process. You want to match the good delivered note and the order. So once the goods are delivered, you want to bring the goods delivered note back and match it to an order. And you want to make sure that all customers sign the goods received note so that you know that the customer received the goods. Our next step is to raise an invoice. Our control objectives: we want to make sure that there's an invoice raised every time. We want to make sure that it's for the correct amount. We want to make sure that any credit notes which are raised are valid and for the correct goods. Procedures to ensure this happens: well, you can match the goods delivered notes to the invoice. You can agree the invoice to the price list to ensure that it's at the correct amount. You want to ensure that all invoices are authorised, and you want to make sure that the credit notes are allocated to the correct invoice. So that brings us on to recording the sale. When you're recording the sale, the control objectives are that all the sales are recorded, they're all recorded at the correct amount, and that they're all recorded against the correct customer. In order to achieve this, you're going to have a debtor's review for credit balances. You're going to reconcile the debtors regularly. You're going to check all the entries to invoices periodically. And you're going to send regular statements to customers to make sure they'll soon get in touch with you if their statement isn't correct. Lastly then, we're going to receive payment for the goods. Okay, the objectives when we're receiving payments are that the correct amount is paid, obviously, that everything is paid, that all the receipts are recorded, also that they're correctly recorded, and that all the cash is banked. And in order to ensure that, we're going to have several procedures. We're going to agree our receipts to an invoice, match them up. We're going to review our aged listings to make sure that everything agrees. And we're going to have that segregation of duties so that the person responsible for the invoicing isn't also responsible for the banking of cash, because there's a potential control risk there. Okay, so that was Lecture 4, Internal Controls.